Welcome to Insured Investors, where we share practical real estate investing tips with an insurance twist. I'm your host, Brooke Beats. Let's get started. Umbrellas are one of the most misunderstood insurance policies. Investors oftentimes assume they don't need liability coverage if they have an umbrella policy, and that's simply not the case. Here today, Jacqui Price, EVP of Underwriting at Insured, is sharing what investors need to know about umbrella policies. Welcome back to the Insured Investors Podcast.
Thanks for having me.
So, interesting topic today. We get a lot of questions about this. A lot of people misunderstand what exactly they are. So let's just start simply by, what is an umbrella policy?
Well, that's a good place to start. So umbrella policies are a way to garner additional liability coverage beyond just your underlying policy. At Insured, with our investment properties that we insure, that would be your premises liability coverage. So it would be a way to garner additional liability coverage than just your premises liability or your primary liability. They're also a way to provide that extra layer of coverage to the owner, whether it be an entity or a person who owns it outright, or the additional insured listed on the liability policy. So it's a way to get additional liability coverage above and beyond your primary limit of coverage. It's important to note that umbrella policies do not eliminate the need for investors to buy primary liability coverage. They don't offer any protection for the property itself. It's strictly liability coverage, not property coverage. And they don't kick in until after the limits of your primary liability policy is excluded, which is why you have to have a primary policy in order for your umbrella to have any effect, because the primary has to pay out first.
Interesting. Okay. So the terms excess liability and umbrellas are often used interchangeably, but they're not the same. So what are the main differences between the two?
So an umbrella policy, the true liability umbrella policy, can extend over multiple different lines of business. So for example, for a business venture, you could have commercial auto coverage, you could have your business owner's coverage, you could have your rental property insurance. Those are different lines of liability coverage. And a true commercial lines umbrella policy can extend over and above all of those different lines of coverage. So if you have multiple primary policies and types, an umbrella policy may be right for you. An excess liability policy just extends over one line of liability coverage. So if the only additional liability coverage need that you have is for, we'll say, investment properties and your premises liability coverage for those properties, then you might only need an excess liability policy, which will just extend over and above that one line of coverage.
Outside of excess liability and umbrellas, are there any other options?
There are. So you should consider how much coverage you have on your primary liability coverage. I know some rental properties with various carriers can start at $300,000 worth of premises liability coverage. And so if that is not enough, potentially that's when you want to look at raising that limit with your agent. I know Insured offers liability limits starting at $1 million per occurrence with a $2 million annual aggregate, and that's our base coverage for liability. And that is a per location limit, where every single location you have insured with us has $1 million, $2 million limits. However, we do know that some of our investors prefer higher liability limits, and so we actually offer up to $2 million per occurrence with a $5 million annual aggregate per location, which can be a better way to protect your assets and to garner more liability coverage for each of your locations, instead of having $1 million, $2 million limits per location with a $1 million excess policy on top of it. Because if that excess liability policy is exhausted, then the rest of your locations are left without any excess liability coverage. So therefore, if you decide to move from $1 million, $2 million per location to a $2 million, $5 million limit per location, you're actually getting more liability coverage than you would with an excess liability policy, and it's oftentimes more affordable to the client.
Okay, that's great information. That's a lot of options that people probably don't know.
Yes,
that they have.
And that's why it's best to talk to your agent and find out what options they have available for you.
Okay. So what about misconceptions for the policy?
Well, I think the biggest misconception, which we've alluded to, is that would be that you don't have to have a primary liability for an excess liability policy to be valid.
Mm-hmm.
As I said, the primary liability policy has to pay out to its fullest extent before the umbrella or the excess liability policy can come into play. And that's very important for people to know. It's also important to know that in most cases, what's excluded on the primary policy is also excluded on the umbrella policy or the excess liability policy. So if it's something that's not covered, it's generally not going to be covered by your excess coverage. So it's very important to make sure that you have adequate primary liability.
What should investors know before purchasing an umbrella or an excess policy?
There's really no right or wrong answer as to whether or not the amount of coverage you have in your underlying policy is right for you. It truly is dependent on the investor or the insured about how much coverage they want to take on themselves, really what their appetite for risk is, and really what helps them sleep at night. So if you feel like your $1 million, $2 million limit is sufficient and you're never going to have a liability loss above that, then you may not have a need to go out and get an umbrella policy. However, if you are worried, then that is something that you should talk to your agent about and at least get pricing and then make the decision from there. Some additional considerations that I always advise my clients on whenever they are asking about umbrella policies is to consider how many units are in the location. So if you have a single family home, you have one tenant, you have their one tenant's guest on and off the property at any given time. And that's a lot lower of a liability risk in most cases than, we'll say, a 12-unit apartment complex. So you have 12 tenants, you have 12 sets of guests, you have all kinds of people on and off the property at any given time, and that's just a greater exposure for a trip and fall or some other kind of liability risk. So I would say the number of units per location is something that you could consider when you're trying to determine how much coverage is right for you. Another point of interest would be the area where you are investing. Some areas of the country are simply just more litigious than others and are more likely to grant the claimant a settlement after a slip and fall. And so potentially where you are investing could impact how much liability coverage you think that you need. And lastly, and potentially most importantly, I would say consider if the location is owned by you personally or owned by a business entity like an LLC. If you own the property personally, that means your personal assets are at risk should a loss occur. And so I know I would sleep better at night if I owned a location personally, if I had a lot of liability coverage on hand, just in case the worst were to occur. Whereas if all of my risk was tied into a business venture, I potentially may not need as much liability coverage. But again, every investor, every business plan, every person is different. Mm-hmm. Their appetite is different, and what helps them feel better at the end of the day is different. And so it's really up to the individual investor how they feel they should be insured. There's no algorithm. There's no magic answer that we can give you. Your agent can almost sell you as much liability coverage as you could possibly want, but it's not always necessary. So it's really something that the investor has to consider on their own.
So it's truly understanding, which we've talked about several times in the podcast, truly understanding the coverages, mm-hmm. what is and is not included, and making sure that the investor understands what their policies are.
Exactly. You can buy all kinds of insurance that you might not need, but if that is what you want to do, if you want to make sure that every single type of loss is covered, mm-hmm. then that's your prerogative. Yep. That's totally your choice. If you're willing to self-insure a little bit more, if you're willing to take on a little bit more risk, that's also your choice.
Yeah. Okay, so some insurance agents unfamiliar with real estate investing may advise a client to insure their rental property on a personal dwelling policy, which typically includes $300,000 to $500,000 limit of liability, and to purchase a personal umbrella to extend the limit of coverage over both their personal and investment properties. Why is that a bad idea, or is it?
It is a bad idea. Man, I remember my early days of insurance dealing with this exact situation, and I was very confused at the time. So this is definitely something that I'm passionate about because I didn't understand it at first. So let's say you have your personal home, your personal auto insured with your favorite insurance agent, as you should, and you have a personal liability policy in place with them that covers your personal ventures and your personal assets. We're great there. Then you start investing and you go ahead and insure those investment properties with your favorite hometown agent, and you're putting them with a carrier that's not as familiar with investment properties as Insured might be. Yes, you could have liability coverage starting at $300,000. That simply maybe not be enough. But it's important to note that your umbrella policy, your personal umbrella policy, is not going to come into place for your business ventures. So that investment property, should a loss occur, is not going to be covered if there was a loss. So that's where a commercial liability policy comes into play. And that's where I wrote several years ago my first commercial lines umbrella policy for this exact situation. The guy had 4 or 5 investment properties also insured with us, and he had to do a personal umbrella and a commercial umbrella. And it sounds like a lot, but personal lines and commercial lines coverage are completely different. When you're talking about liability coverage, they are completely different forms and what's included and what's not included. And again, your umbrella is a follow form. It follows the underlying policy, so you really have to make sure that you have a commercial umbrella to cover your commercial liability risks if the umbrella is right for you.
Good to know. Okay, so let's recap. What is an umbrella policy, and when should investors consider having one?
So an umbrella policy is something that can shield you from the storm, right? So think of that umbrella that's going to go over and above all of your assets, all of your ventures, and provide you an extra layer of liability coverage. Whether it be a personal umbrella for your personal interest or the commercial umbrella for your business ventures, it's going to go above and beyond your primary liability coverage and offer you extra, just in case the worst happens. Of course, none of us want to get that lawsuit on our desk with a slip and fall for a $2 million loss. But it happens. And knowing that you have insurance coverage for that when it does happen is very important. And then the other point that I want to just drive home again is that there's no right or wrong time to purchase an umbrella, and not everyone needs one. So one thing that you should ask yourself when you're considering it is, in the face of a wrongful death lawsuit, are you comfortable with the per occurrence limit of liability coverage that you have? If the answer is no, I would talk to your agent about what's going to help you sleep at night. If the answer is yes, then that is fantastic. Again, there's no rhyme or reason as to how much coverage you need. It is everyone's personal appetite.
Okay, let's move into the game segment. So we pulled questions from Bigger Pockets Forum, where investors ask advice about all things real estate investing. In this case, we found questions surrounding umbrella policies. Jacqui is going to share some general advice regarding the situation. Please note, information is limited and does not apply to all situations. Okay, first one. First question is, I have been investing in a single family and small multifamily for the past 15 years and have grown to approximately 40 doors in Nebraska, Iowa, and Missouri. I am concerned about liability protections. Currently, all of our properties are owned in an LLC. I have general liability insurance and a personal umbrella, which I do not think will cover me as I may need a commercial umbrella. How have others structured their insurance and property ownership to maximize liability protection?
Yeah, this is someone who definitely, definitely needs to talk to an agent. They're on the right track, though. They know they probably don't have as much coverage as they need. They have 40 houses, and some of them are multifamily, so I'm not sure how many tenants they have, but they have quite a bit of risk under their plate. And if it's all in one LLC, one bad loss could take down their entire business venture. Yes. So, yes, they are correct. Their personal umbrella is not going to come into play should a loss occur at one of their investment properties. So they do need to look, if they're uncomfortable with their current insurance, they do need to look for something else. Now, here's where you have a lot of options, as we've discussed. If you have other commercial liability coverages, they might want to look at an umbrella so that they have an umbrella to go over multiple lines of coverage. If they don't, if they only are concerned about these 40 doors, then they potentially want to look at an excess liability policy with their agent. It could be $1 million, it could be $3 million, whatever helps them feel better about their investment and their risk. But they have to know that if they have a $1 million policy, the 40 doors share that $1 million of excess coverage. So potentially $1 million is even not enough. Again, then I go back to Insured's option, where we offer $2 million per occurrence and $5 million annual aggregate per location. And that would give them likely more coverage than even an excess liability policy would. So really, I guess my advice to them is consider how much coverage they have per location, and then consider how much coverage they think they need per location, and then find the best way to garner that much liability coverage.
Okay, great. Second question. I have liability coverage on my landlord policies. I have 5 rental properties. Should I also get a separate umbrella policy? If I get an umbrella policy, should I remove liability coverage from the landlord policies?
See, just another great question. And this poster is just asking a question that so many people ask. And so many people have asked me during my time working in insurance. And so it's a very common question. They have 5 rental properties. I don't know how many doors they have. Well, potentially they're all single families. But again, it's up to them. It's up to their personal risk appetite of how much coverage they think they need. I don't know how much underlying coverage they have. They might have $300,000. Okay, they need to consider that. They need to figure out how much coverage they already have. But to answer their second question, if they get an umbrella policy, that is above and beyond their underlying policy. That is not in replacement of their underlying policy. So even if you go get a $5 million umbrella, you still have to keep that primary coverage in force, or else you don't have any coverage at all. So I would advise this person to go talk to their agent and see how much additional coverage would cost. Well, I guess first, see how much coverage they have, see how much additional coverage would cost, and I would also advise them to make sure they keep all of their coverage intact.
Okay. This has been wonderful.
All right.
Thank you for all the information.
You are so welcome. I'm happy to be here.
We'll continue to post new episodes on NREG's YouTube channel, that's NREIG, and on Spotify and Apple Podcasts at Insured Investors. You can also follow NREG on Facebook and LinkedIn. See you later.